Welcome to Trillions. I'm Joel Weber.
And I'm Eric Balchunas.
We talked about BlackRock last episode. Huge player, obviously, in ETFs, and now they've made this foray into crypto and specifically Bitcoin. The other big asset manager is Vanguard, which will probably get nowhere near crypto ever. But what's even more significant is there's a new CEO who happens to come from BlackRock. Who is he?
Yeah, this is it was a bit of a shock, although I will say on ETF IQ, I said he was one of my possible candidates because I knew he was available. This is Salim Ramji, who was the head of all their global ETFs at BlackRock. So bigwig. There was some chatter he might succeed Larry Fink at some point, but he just left. That was a surprise, by the way, about 6 months ago. So he was available. I thought he might do something nonprofit and just sort of slowly go out of the scene. But when he got hired, I was like, okay, it's a little shocker, but Vanguard is evolving all the time. And this makes sense to me on a couple levels. I think Vanguard they have new challenges. You know, getting flows into ETFs isn't exactly a huge challenge for them, but they have some new challenges we'll go over. But also, I think that Salim, probably won them over. He's a true indexing advocate, and he can run an ETF business, and Vanguard is very into ETFs these days. So when I started to think about it, it wasn't that big of a shakeup. Plus, he's got to report to the board. He can't go crazy. But it is interesting because he was advocate for the Bitcoin ETF, and there's a couple kinds of things he's done that I think are probably would push the envelope there for sure. So it's going to be interesting. But, Vanguard is almost 50 years old. And my guess is that their culture, he adapts to it more than he pushes BlackRock culture on Vanguard. That's my guess.
Oh, so you mean he becomes like part Bogle?
Yeah. He gets absorbed by the cult more than he changes things too dramatically.
Okay. Well, we're going to get into all of this with Silla Brush, who covers asset management for Bloomberg News. Also worth mentioning, if you want to hear Salim Ramji in his own words, when he was at BlackRock, we had him on the podcast in December of 2021. Go ahead and search for that in your feeds. This time on Trillions, Vanguard gets BlackRocked. Silla, welcome to Trillions.
Great to be with you.
Okay, just how significant is this leadership change? Because there has not been that many CEOs since Jack Bogle stepped down in 95, right? So this is a little bit of a legacy issue.
I think it's a legacy issue. It's also, the first CEO that they picked who's an outsider. And I think that's, one of the surprises about it. Every person who's led Vanguard has had a long tenure at Vanguard prior to being elevated to the CEO. So, of course, Bogle, the founder, and the following three CEOs, worked with the man himself and spent quite a bit of time, each of them, at the firm. And so it's an interesting pick as an outsider coming into a firm which has a very strong, I guess on some level, all cultures are unique, but a very strong and unique culture. And I think that's, one of the things that caught people by surprise, maybe a touch less who they picked, but just that they picked somebody, right, coming in.
Describe the Vanguard culture.
So it's, I think they kind of talk about it almost as a mission, sort of a zeal about low cost index investing for the masses. That basically, Jack Bogle took a product that, wasn't very popular in the 70s and
an index fund,
and had a very strong, fervent belief that it could be marketed and sold to the masses, and over time it would outperform, and low cost would be a winner for investors across America and then later on, essentially the world. And that really is the mission of the company. And it's not a for-profit company. Yeah. It has this almost sort of unique ownership structure, all kind of geared towards keeping costs low.
Yeah.
And let's go into that, because the book I wrote, The Bogle Effect, the whole premise of the book was that the ownership structure to me was the primary thing driving everything you see. Because every time money came in the 70s and 80s, instead of spending the money on like sponsoring a sports stadium or paying executives more, the board was representing the investors, and they were like, actually, I'd rather have the money for lower fees for me because I'm the investor. And so that's why the fees came down little by little. The first index fund was like 60, 70 basis points, but went down until it got to like 20, 10 in the 90s. That's when it took off. So to me, indexing wasn't really that great of an invention. It was okay. It was cheapness that was sweeping the nation. So indexing kind of got lucky, I think, but they were kind of hand in glove, right? Yeah. This idea of low cost, and then you put an index fund on top of that, boom. I mean, that's the big idea. But an index fund at 70 basis points, I don't really think is that great of a concept.
What was active then, though? Probably well above.
You're right. So my premise in the book is that indexing would have like maybe 5 to 10% of the assets it has if it was 70, 80 basis points, because indexing would be okay, but it wouldn't be like crushing every active manager where you're like, oh my God, the evidence is so strong, I will put my money but again, the low fees are really the thing. And it's interesting, Salim, I interviewed for the book, and I could tell he was a fan of Bogle. He has his books. He's a student of the index, but he kept trying to give credit to Wells Fargo, who technically invented the index fund. Mm-hmm. Bogle saw it and ran with it and came out with the second index fund. But Bogle always said he did it, but he always glorified his story. But my point is, I think Salim couldn't say that Bogle and Vanguard were the big deal because he's a BlackRock. So in his podcast and on ours, he would say Wells Fargo, indexing, low friction, low cost. He's into he checked all the boxes, but he wouldn't say the V word. Mm-hmm. So think of BlackRock, you can't say the V word. Mm-hmm. Now he's at Vanguard, and I think he'll go a little wild promoting this, and I think he'll be able to now be more full-throated about how he feels about Bogle. And I thought, I'd like to get your take on this, Silla, that when he was in the interview, to go over an outsider, you have to win over their hearts. My guess is he went for 3-4 interviews, and it was this passion for indexing and low costs and access that won them over, because they knew he had the experience, but did he have the cult DNA? And I think he showed he had that.
Yeah, I think that's right. I mean, I think one word that comes up, a couple words that come up pretty often when talking to people about Salim: cerebral, academic, and very much sort of a strategy consultant. So I think, kind of a student of the markets and a student of the industry. And prior to being at BlackRock, he was a partner at McKinsey for a long time, where he also advised BlackRock. But, he was in the asset management and wealth management practice there. And so I think that kind of a background, perhaps a little less as a trader, that's Wall Street trader. That's not his sort of origin story, formative years. It's very much a kind of, advisor, strategic consultant, academic, if you will. He's a lawyer by training. I can see that being, more the mold or model that if Vanguard were to pick somebody, that would be kind of the person that they would consider. So I think he really is a student of the markets. Lots of people are, but I think that is a kind of a personality that, that's how a lot of people describe him.
Okay, so you have this outsider from BlackRock now entering Vanguard, where the culture has been relatively unique. They've had some old ways of doing things. The ETF even has been a thing that I think has been a source of friction internally. Bogle, as we know, didn't love the ETF, and yet that increasingly looks like a bigger share of their business. What do we expect from the new guy?
I mean, I think the real question is continuity and change, right? The culture is so strong that there's like an entire, millions of people who are investors who are, Bogle heads, and they've bought into this philosophy, and it has been good for them, and they don't want to see that just die away. So being true to that while also finding areas for growth, right? Like that is the challenge. As Eric said, ETFs and indexing has really taken off. Maybe the trajectory of it took off more in the last 10 to 20 years than maybe in the prior 20 years. But nonetheless, it's taken off. There's a question of how much more can it grow? There's a lot of talk now about whether active management or more active selections of funds, because rates are higher now, the task of investing, maybe there are more opportunities for active management. Part of this is all marketing and spin, but there is a lot of discussion about that being more growth there than just basically put it in a fund and forget about it and you'll be fine. And so I think for Vanguard, the question is, are there areas that they can find and try to exploit? And they've been trying to do this. Advisory accounts, they've been getting into it. more international. They've tried in fits and starts and not been terribly successful. And then, not necessarily an area for growth, but it kind of goes across everything, is the technology of the firm. And I think, there are a lot of criticisms of its ease of use, whether it's technologically as sophisticated as other firms. So there are lots of areas in the firm that are sort of growth potentials. And I think that the challenge obviously is to realize them and to actually grow. And I think that's part of the mission.
Well, that somebody with a little McKinsey blood would have some appeal, I think, then.
Two things on this. First of all, this idea of growth in general, Bogle would hate. But he hated it when John Brennan did it. He hated it when McNabb did it. He just hate. I remember going to interview him the first time, and he goes, "Can you believe we have $4 trillion in assets? That's obscene." And he goes, he had this framed picture of his book Enough, and underneath he had Trump's book Never Enough. He goes, isn't this great? So he was he was all about enough. He didn't think we should grow at all because he thought we're going to lose track of the hearts and souls of the actual customers, and they're all going to be numbers to us. I think they're well beyond that. Now they have like 8.3 trillion. They have double when he was upset. So I do think within the current Vanguard CEOs, he fits perfectly. To me, he's like a Buckley. It's Bogle that's so different and will always be the anomaly in physics. Everyone else to me is a more normal, and he's very reserved. He's not going to say anything stupid. Bogle would just drop bombs right and left, and he was a PR person's nightmare, but in a fun way, in a good way. And at the time, I think to break through the industry at that time, and because you're not distributing, you have no distribution fees, so you have to get everybody to come to you. You have to be pretty maverick. Everyone else is more of a caretaker, but they're all trained in like MBA to grow. Like, what else are you supposed to do? Like, supposed to go into a new firm and go, let's actually retract. So everybody's, been trained to grow. I think the point you brought up was interesting about the advisory business. So I don't think he has to do much with ETFs. I think the fish are jumping in the boat. At this point, you could probably say, don't invest with us, and the money would still come in. They take in $900 million a day for the past decade. Their ETFs this year have taken in 36% of all flows. This out of 600 issuers. It's fine. Advisory is interesting. So most of the people in the wealth management business are Vanguard fund investors who got old. That's why they launched it. But it's got $300 billion, but the fees are real low, Joel. They're like 0.25 and below. So if you have a lot of money, you can get to for 0.5 or 0.10. Most advisors are 1%. So this is dramatically cheaper. And I think Salim could make that one of his legacies. Tim Buckley even called the wealth management engine number 2. I think he'd be good at that and basically taking their advisory service externally. The only thing with that is once you become an advisor and you're full service and you have all different types of people who want different things, they're going to request private equity. They might request crypto. They might request options. Like it's going to take you into some un-Boglean areas. But again, Vanguard's past that because remember, Bogle got pissed off at every CEO, especially his successor. I mean, there was like 25 years of him dropping bombs on management from his research office. So he would drop the same bombs on Salim. I don't see anything that different there.
Maybe in some ways, this is like a perfect job because you don't have to deal with the Maverick still throwing bombs or ever having a direct connection to him other than, probably through the industry.
That's true. And, what's funny is that he'll have to answer to the board. But I think the board is probably going to be more like him. Again, the board kicked out Bogle in 95. How about that? How about you start this company and you're so crotchety and like annoying that the board's like, you got to go. So I just find that's why I wrote the book. I'm like, this guy is wild. Anyway, the other thing, the technology, I think that relates to customer service. That's another thing Vanguard needs a lot of help with. Did you look at that at all? Because I know I looked at their Yelp reviews are bad. Bogleheads forums, this is Bogleheads. They love Bogle. They're like, I don't like Vanguard. I was at the Bogleheads convention. I met somebody who's like, I am in low cost Vanguard funds, but on Fidelity's platform.
Exactly.
Yeah. So what do you think he's going to do with that?
That would just irk him to no end that you're using Fidelity to trade Vanguard funds.
His head would explode.
it's also worth mentioning BlackRock, known for its technology, which is a software called Aladdin. So, yeah, how do you think they'll go about wrestling with this technology question, Silla?
I think it goes down to the question of how do they want to change the company if they want to change it, right? Like if they really go full force into an advisory business, they're going to have to really up their game on technology. It also brings them into a new kind of competition with the Schwabs and the Fidelities of the world, companies that have branches in major cities and smaller cities across America. That's not something Vanguard has, and it is a kind of a connection that a lot of clients like to have, that you can walk into a branch and talk to your advisor. Vanguard doesn't have that, and it's entirely by phone. And unless you have a lot of money, you're basically put into kind of like a bucket of advisors, and you kind of call or email and you get like whoever responds. That's not always the case, but it's not like having one personal connection. And so I think they kind of have to decide, if they really want to expand greatly into that and if they need to change the business model at all. And then, the company does become more and considerably different than what it is today. The BlackRock comparison is also different. BlackRock is not people don't have individuals don't have personal BlackRock accounts. You're holding iShares at Fidelity or at a broker, unless you're like a foundation or a large institutional investor. And that's, these companies, while they do many things that are the same, they also very important differences between like how they sell stuff, who they sell it, the lineup of products, the advisory business. So, I think that kind of institutional business is very much core to BlackRock. It's not as core to Vanguard, except on the 401k accounts.
So, Eric, if you're Vanguard and you have this existing portfolio and here comes new guy, what do you think the product offerings could be? How could they change? What could they look like?
Yeah, I think there'll be incremental changes. Vanguard launches very few products, maybe 1 or 2 a year. They're very picky. I can see that doubling, maybe. It just depends on what his focus is. When I interviewed him for the book, one of the quotes he said to me was, our traffic light system where we give red lights to like leveraged. BlackRock tried to implement a system and call all of those, I think, ETIs, because he didn't want ETF to be contaminated by the crazy stuff. And that's something that Bogle and Vanguard and Salim all would agree on.
And there's money there too.
Yeah, that leveraged, like there's so much stuff that they would consider a distraction. I'm fine with it.
Bogle is rolling over.
Yeah, but this is everybody would be on the same page here, whether it's the successors, Bogle or Salim, which is leveraged, inverse, things that roll commodities, futures. That stuff should not be part of any account. So the question is things like gold, right? Single gold. Yeah, you can buy a gold ETF on Vanguard's platform, but you can't buy a Bitcoin ETF. Well, maybe they'll add Bitcoin. It's only long only. Then there's things like BlackRock has a Fallen Angels bond ETF. Well, Vanguard has the next level up, but they don't go one level down to the niche of just double Bs. Maybe there'll be a Vanguard double B. Vanguard has a market neutral mutual fund. Maybe they launch something like that, which would be interesting in an ETF format. The active equity, Vanguard active equity mutual funds have a lot of money, but they're seeing outflows. That's one area Vanguard is like having problems, just like every other active equity mutual fund manager. But if they came into the ETF world, people are buying active equity ETFs, and they're buying them if they're cheap. So they're already cheap. So if they launched like a Wellington, Windsor, or a variety of their active, if they made them available in the ETF format, I think they would sell. But again, the question is, how much is he going to convince the board we need to sell more versus we're fine, work on this other stuff. But I could see some tiny incremental changes on the product line, but I don't see them, say, launching a double leveraged high yield bond ETF or anything like that.
Man.
Yeah, they're not going to go. He's not going to get that just won't happen. Again, this is obviously
you're describing kind of new versions of vanilla,
basically. Yeah.
A lot of those products also, like in the BlackRock comparison, a lot of their products that are sort of these, precision or specific parts of the market are geared towards, very active traders, if not institutional traders. Like sometimes there's a misconception that ETFs are traded mostly by retail and they go in and out. ETFs at BlackRock and a bunch of other large firms become a tool for very sophisticated institutional portfolio managers to go in and out of the market. And like that's one of the reasons that BlackRock has many more and many more specific funds.
Vanguard traditionally only made funds that you bought and hold, ETFs. So their turnover, the trading of the ETFs relative to the assets was tiny. And Bogle actually loved that. He was like, hey, at least our ETFs aren't traded that much. That was the one thing, saving grace he could take, even though he didn't like ETFs. BlackRock's trade more. And then something like ProShares, they trade a ton. But some Vanguard ETFs are starting to trade more. VU is in the top 20 most traded ETFs consistently. And if VU starts to get more volume, at some point, it's going to start to peel away investors from SPY because it is 3 times cheaper. It's 3 basis points versus 9. So it's interesting if Salim's BlackRockian mind, which would be like, we should go after the trading crowd because it's going to help us get more assets from SPY. That would be what he thinks as an IVV manager. But will he think that as a VU manager? That's going to be interesting because you could argue that if you get more volume, the spreads are lower, so the costs will be lower, people coming in and out. And the more people in it, the more you could lower the fee based on the mutual fund structure. So you could actually do some mental gymnastics that say, actually, trading in our ETFs is good for everybody long-term for the mission. You could definitely do that. And I think he did it at BlackRock. Will those connections be made at Vanguard? I'm fine with it. And at some point, if an ETF like VU is the most traded and cheapest, I mean, look out. Like these ETFs that trade a lot and they're low cost, like IVV and VU, it's unbelievable how powerful these things are going to be in the future. There's whole ecosystems around them with options. And VU alone this year has taken in $36 billion, right? The record in a year is like 45. So it's already like halfway there, or 50 maybe. So it's already 14 billion away from the record. It's unbelievable how powerful some of these, I'd say the top 20 ETFs at Vanguard and iShares are becoming.
What about conversions? You mentioned the mutual fund ETF tension, and obviously conversions have been a theme. Do you think that's an area of opportunity for him to bring over sort of heritage Vanguard funds and bring them into the ETF world?
So this is interesting. Love to get your take on this, Silla. Vanguard has been pushing people to the ETF as much as possible. Some of their ETFs, they already have the ETF share class as part of the mutual fund, and the ETF, I believe, is cheaper in some cases. So a lot of people who would be in the S&P 500 mutual fund have moved to VU, right? And it's tax-free move. That's going to be interesting. And will they, as part of that, will they convert mutual funds literally into an ETF? Will they take the Windsor and just make it an ETF? If you do that, what you do is you push everybody to a brokerage account. And the question is, where do they push them? The good news for that is it takes some, I think, burden off of your customer service desk. Because remember, everybody who was in Vanguard had to go to their website and buy the funds, and now they're Vanguard's problem. Whereas if you buy it on Fidelity, you could call a Fidelity person and not a Vanguard person, even if you own the Vanguard fund. You know what I'm saying? So by pushing the ETF, they sort of help their customer service burden. But at the same time, I just don't see them converting a mutual fund. That just doesn't seem like their culture. But the only way I could see it is if they come up with the idea, again, little mental gymnastics. The more we get our own people into ETFs, the more we disperse their customer service needs.
But I still think Vanguard likes that the mission of the company resonates so strongly with their clientele, right? Like I think the company is known for a couple really core things that since the founding of the company, basically. And with more levels of detachment from their clients, they're kind of juggling multiple things. Like a technology is sort of, all companies wrestle with that, but also at the same time thinking about having even deeper connections with their clients by way of advisory. So it kind of cuts both ways. I think that's probably mission number one. And you saw Salim sort of mention it, approaching his job with the zeal of a convert, I think was close to the line. And I think that kind of sentiment is just so central to the company. It's basically in his inbox when he starts, right? Like, how much does he stray and how much does he stay true? I mean, that's clearly the question.
Now, let's talk about younger people, because I do think if you talk to Gen Y, or my kids, Gen Alpha, I forget where the cutoff is, and maybe even some millennials, but I would say younger than millennials, I just get the feeling that something like Vanguard and low-cost indexing isn't penetrating as well as you'd think it would. Because obviously that's a great deal. The people in the middle get less of your money, you get more in retirement. But I see their commercials. It's like a typical mutual fund commercial. It's like somebody with a golden retriever on the beach and their kid just graduated college. It's like that kind of boomer thing. And I know they have all the money, but do you think that Salim will help maybe make Vanguard a little edgier or make their message resonate more with younger people? Because the boomers are going to transfer the wealth down soon and younger people get more money. It's just the nature of life. And so I think they have a little problem there in converting that really punk rock message. I mean, I think Bogle to me is, as you know, we wrote the article, is punk rock, interesting, but it seems like Vanguard's kind of gotten a little less of that and they've become a little more smooth boomerish.
I mean, I think lots of companies are wrestling with this, right? Like ever since, meme stocks and Robinhood took off a couple of years ago, right? Like so much energy and excitement about, trading, day trading, all sorts of complex things, or just putting money into stocks that just have, shoot the moon. Crypto is obviously a version of that. It's interesting that a bunch of companies, and not necessarily Vanguard specifically, but a bunch of companies sort of bizarrely like seeing that, because if Robinhood was the first stop on a younger investors, traders, person's sort of financial journey or whatever that they want to call it, once they kind of get that out of their system, they're sort of like attuned to now doing something with their money. And then the question is like, where else can they put it? And a lot of other companies that are perhaps, more staid and boring are not necessarily opposed to some of that sentiment among younger investors because it at least gets people interested. And once they're interested, it's at least an opening that they can entice them their own way.
That's an interesting way to put it. Yeah, you're right. And I do agree that young people sometimes have to get something out of their system with investing. I did it with tech stocks in the late 90s. You're a little...
I don't know if I did it.
You got a taste of that?
Yeah. No, I
I'm a little
vanilla
older.
ice cream.
Yeah.
Yeah.
But everybody goes through this. Then you get responsibilities.
Exactly.
Maybe you're in a relationship and you can't mess around with GameStop.
It's what financial advisors say, right? Like some people start, do-it-yourself investing, and then like maybe that doesn't go so well. And then they're like, well, how do I prevent, a worse thing happening the next time? And then they reach out to some financial advisor, and then that's how it goes.
That said, a lot of the GameStop people, and I know the crypto people, they have this feeling that Wall Street's rigged against them, and this is the way to get back at all of the big Wall Street big shots. But if you look at the data and you look at the real way to get back and like stick it to Wall Street, like a low-cost index fund is the most powerful way to do that. It's just not, it's boring because it takes a long time, but that's the tried and true way to accomplish that populist goal they have. That would be my other point, is that it's the populism part of the meme stocks and crypto that I think there's something not being translated, that this is the way to do that. The problem is, I just think this becomes like a faster way to do it and more fun. So when I'm on podcasts with meme and especially the meme stock people, I'm like, look, just admit this is just a good time with you and your friends. Just admit that's what it is. Because if your real goal is to make money and sort of like stick it to the man, there's this other way that really does it in a true way, in a scientifically proven way. Your way is the exact opposite. It's really just making like hedge funds that make markets richer. And
which is Bogle's original message, right? Like the game is rigged. This is the tried and true way to win, which makes me think, to go back to all the other things that we've hit on, this is a tech and product challenge that the new guy will probably have to wrestle with. The point of an advisor in all of this is like, hey, I just got all this money from, boomer generation or whatever. What am I going to do with it, right? That is where
it's also
you could have a real plug and play solution.
It's also a question of their clients, right? Like, do they want more of the same clients, grow their designated part of the market, or do they want to hit new kinds of clients? Yeah. And I think that's one of the main questions that they're going to have to wrestle with.
Interesting about Vanguard is that recently, I don't think they use Bogle enough. In fact, like they got rid of the ship logo, but maybe you could say that is a way that's a little older looking. But I feel like if I was Salim, I might actually bring up some clips of Bogle and maybe even use them, because some of the stuff he says and the way he says them is powerful, and it can break through more than something that's smoother. It's more rough around the edges, but we'll see. I just think they should embrace it. Just like if I was Tim Cook, I would totally embrace Steve Jobs and be like, yeah, this guy founded our company, is great, and here's what he said and did and whatever. So I would just keep that in mind. If I was running Vanguard, I would use that as a tool in my toolbox rather than like, oh, that happened a long time ago. We're this new company. I think they could benefit from really Bogleizing their message a little.
You're just trying to sell books.
That too. If you do want to learn more about everything I just said.
All right. Silla Brush, thanks for joining us on Trillions.
Thank you.
Thanks for listening to Trillions. Until next time, you can find us on the Bloomberg Terminal, Bloomberg.com, Apple Podcasts, Spotify, or wherever else you like to listen. We'd love to hear from you. We're on Twitter. I'm at Joel Weber Show. He's at Eric Balchunas. This episode of Trillions was produced by Magnus Hendrickson. Bye.